Welcome traders to this new market review for week 10 for Nasdaq futures. I hope you had a wonderful trading week. Normally we first start with the economic calendar and then we dive into what happened last week. But this week I want to do it different. I want to start with last week's market game plan. To show if anything I outlined the week ahead of last week's trading week actually came to fruition. So I want to show you this part of the market game plan for last week. So I'm trying to capture a run on Monday. It's generally the best day to trade during an NFP week. The Tuesday is a great day as well. On Wednesday, I am done after the AM session. So we have 8:15 AM news release, 9:45 AM news release, 10 AM news release, and I don't consider the 10:30 AM crude oil inventories. It's not a very big impact on the American indices. So on Thursday, I have an early weekend, and everybody else can try to capture something or just simply get wrecked. But I'm gonna enjoy the weekend on Thursday, and same goes on Friday. I'll do some tape reading on Thursday and on Friday, but I am not executing on these days because my So I was actually saying that due to the fact that we had an NFP week, my main focus was on the early part of the week. So for Monday, Tuesday, and perhaps Wednesday, and Thursday and Friday I'm just skipping due to the NFP release. So let's dive deeper into the economic calendar. We started the week on Monday with a 9:45 AM and 10 AM news release. In the afternoon, Trump was speaking. On Tuesday, we had President Trump speaking at 10:09 p.m. On Wednesday, 8:15 a.m., 9:45 a.m., and 10 a.m. High and medium impact news drivers. On Thursday, we had the unemployment claims at 8:30 a.m. We had FOMC member good morning. FOMC member Waller speaking and President Trump speaking in the afternoon. On Friday, main headliner for the week was NFP release with the unemployment rate and the average hourly earnings. On 11 a.m., President Trump speaking. Later, at the start of the afternoon, Fed Chair Powell was speaking. And in the afternoon, President Trump speaking again. So, let's start on the higher time frame. So for last week we had a down close week. We started on Monday over here. We opened at 21,005.25. We had slight manipulation up, creating the high of the week on Monday. We know that 70% of the time the high of week is created prior to the London session on Tuesday, but as late as Wednesday's London Open. But for this week, the high of the week was on Monday. Note the large range that unfolded that day. Tuesday, no considerable news events. Wednesday, a little bit consolidation. On Thursday, we actually had a pretty large range day. I was expecting some seek and destroy profile or high resistance liquidity run, but sometimes the first day ahead of NFP can be nice, but I don't regret taking early weekend on Wednesday actually. And on Friday we took Thursday's low and continued towards the downside, and a TGIF setup unfolded again. Yeah, so we created the low over here and we traded up into the 0.2 and 0.3 level, and we closed just above the 0.3 level. So on the left chart we obviously have the daily chart, on the right chart we have the hourly chart. Monday, high of the week, huge expansion towards the downside. I actually took this trade, took this short. I didn't manage to take it all the way to the downside over here, but
Yeah, I think I closed it around here, so pretty decent. Made like 3% gains. On Tuesday, 2% gains, and then yeah, I was up 5% for the week, and I was actually done. So I had a yeah long weekend. Wednesday, yeah, pretty much consolidation as usual prior to the NFP release. Thursday, London decline, AM continuation towards the downside, and NFP consolidation ahead, taking buy side first, trading all the way to the downside into a symmetrical swing, measured from this candle's high to this candle's low to the downside. And you could have measured this candle's high to this candle's low, which I'm gonna do for now. 510.25 handles, 508.25 handles. So we just fell short of trading into that extension level. The last 2 weeks I was actually focusing on passing a 50k eval and watching how fast I was able to do it. So on the 19th of February we started with a 3.3% gain. Very next day we made $355. 24th of February, which was a Monday if I'm not mistaken, I actually screwed up, and I have to admit that. I almost lost 4%, which is way too much. I wanted to finish phase 1 challenge, which is 10% in 1 week, and yeah, I was overconfident and yeah, made a significant mistake over here. The very next day I was able to make the lost money back. I made around $2,900, which is decent. It's around 6% on my 50k account, so yeah, pretty decent. $290 on the 26th and $1,800 on the 27th. Let me see this. And over here you see the results for yeah, last week's trading. So as I outlined before, my main focus was on the Monday, made $1,350, and Tuesday, the very next day, I made $1,164. So I was able to make $2,500, which is 5% on my 50k account. So yeah, pretty decent, and I'm pretty content with the result. Let's start with analyzing the Monday. So yeah, we start with the best one because Monday had some excellent price action throughout the day. So Monday is on the right chart over here. We manipulated towards the upside, taking this Friday's previous day high. 9 o'clock candle displays towards the downside, and then yeah, bearish continuation towards Friday's low was next, and yeah, you were actually able to capture a beautiful run measured from high to the low. More than 800 handles, which is yeah, way bigger than your 5-day ADR. You can see the huge down close candle over here between the green ones. So let's look into the lower time frames. So as we already saw on the hourly chart, opened over here, creating the low around 3:30 a.m., which is the heart of the London session. Market make sell model, market make a buy model, sell side of the curve, buy side of the curve. And 9:30 a.m. came along this down close candle. You can see that between 9 a.m. and 9:30 a.m. there were some relative equal highs over here. And between 7 a.m. and 7:30 a.m. we had some relative equal highs over here as well. So these were all nested over here waiting for the right time, which was in 9:30 a.m. Opening bell. So what happens next? Create a low over here, displacing towards the upside, order pairing, smart money is selling those buy stops which were protecting the short positions over here. So the bias of those traders was actually right because we were bearish for the day, but the timing wasn't good. And as you are just waiting for this liquidity pool to be purged and revert towards the downside, you have enough time to capture any short over here. I'm not gonna show it for now, you just have to believe my word on it, but I was actually able to capture a short over here. I didn't take it all the way towards the downside over here. I closed it around opening range gap consequent encroachment. Beautifully reached prior to 10 a.m. Yeah, and over here I closed some of the position as well. 10 a.m. exactly reversed to the upside into consequent encroachment again. Note that price is finding resistance over here. I don't like those terms, but good. Look at the bodies over here. And the rest of the PM session, AM session was actually consolidation, waiting for the next session, which was the PM session. I was actually expecting between 11:30 a.m. and 13:30 p.m. Some retracement into these relative equal highs, but this high was able to take this high, but just fell short of taking this one. I was expecting these relative equal highs to be purged in the same session, but it didn't happen. Part of the game. And you can see that during the PM session we continued towards the downside. So after 14 p.m. we have some manipulation up into sell side imbalance, buy side inefficiency over here. Respected this as a premium array and continuation towards the downside into the last hour of trading between 15 p.m. and 16 p.m. creating the low of day. Absolutely beautiful if you ask me. And well, if you look at this chart, you want to be able to capture a short over here, but it's not really realistic. You can see that for multiple hours you had chance to position yourself towards the downside. Over here we had displacement, could have captured something over here. Displacement over here, could have captured something over here. Displacement over here, could have captured something over here or over here. Yeah, absolutely beautiful day of trading. And yeah, as I already mentioned, and this is my every month game plan, if you will. The first week of the month I focus mainly on Monday and Tuesday, because if you manage to capture a beautiful run on one of those days, then you have an early weekend for every month, because the Wednesday, Thursday and Friday you don't have to trade, so you can take vacation. You have lots of free time to do whatever you want. And and plus of that, you have a green month to start with, because I'm already up 5% for the month, and the month only started with the first week. So the other 3 weeks, the only thing I need to do is not fuck around and screw and give those monies back to the market. So I have to control myself, but it's a head start if you want. For Tuesday, we only had President Trump speaking in the PM session, but an absence of high or medium impact news drivers in the AM session. But nonetheless, Tuesday is this green up close candle over here. Looks like a doji candle, how retail would call it. So Tuesday's price action on the hourly is actually here, starting consolidation, manipulation towards the downside. And from 10 a.m. we had beautiful up closed candles. If you measure from this candle's low to this candle's high, you can see that price beautifully traded into this negative 0.25 level, measured from this candle's high to this candle's low. But don't forget the fact that Monday we had an 800 plus handle day. So what do you know if we had a large range day? The very next day is difficult to trade, and you actually want to avoid the AM session and focus more on the PM session. So yeah, let's look into the lower time frames. So again, consolidation, pre-market, beautiful run towards the downside. So 9:30 came along on this down close candle, forgive me. We had a discount opening range gap of 161.25 handles, so it's pretty large if you ask me. Nonetheless, you can see that trading to the downside, taking this short-term low over here, and actually just swept this 829 low over here, and trading into consequent encroachment prior to 10 a.m. Again, creating this busy over here, displays towards the downside, trading back into the first presentation, but note how deep price is trading outside the first presentation. When does this event happen? Well, there are actually two cases where this event unfolds. One of them is the day after a bank holiday, and the second one is the day after a large range day. And we actually had it on Monday, so that is the reason why we are actually trading outside the first presentation. But look what happened next. This plays towards the downside one more time, trading back into the opening range gap low and the first presentation. Look at the bodies over here, and beautiful trade towards the downside was next. And we know that between 9:30 a.m. and 10 a.m. Is generally a manipulation move, traded towards the downside between these in this half hour of trading. We swept the opening range low, which was this candle over here. We swept it just after 10 a.m., creating the true day low over here. And AM session was, yeah, pretty nasty after that, if you ask me. Then 11:30 came along, and we had some beautiful up close, some beautiful rally into these relative equal highs. Fell short of trading into opening range gap high over here. Trading back into the first presentation, treating it as a reclaimed busy. Note what the bodies are doing. We left this part of the opening range gap open, and continuation towards the upside was next. Boom, huge sell-off in the final hour of trading. But again, low of day between 9:30 a.m. and 16 p.m. is created in the first half hour of trading, between 9:30 a.m. and 10:30 a.m. And we're trading up, creating the high between 15 p.m. and 16 p.m. So that is a classical buy day for Nasdaq. Yeah, beautiful price action. And let's see what happened on Wednesday. So on Wednesday we actually had a inside range day. We didn't manage to sweep Tuesday's high, and we didn't manage to sweep Tuesday's low. So this was actually the price action. Let's see if we could have captured a long on Wednesday. So first part of the day, London session, consolidation, creating this high at the final hour of the London session. Sell side of the curve, trapping traders into believing that we were trading towards this low over here. And even though we had a 60.75 handle discount opening range gap, still managed to trade into the consequent encroachment. Note between 9:30 a.m. and 11 a.m. how price is trading inside the first presentation. What is price telling you over here? That we are in high resistance liquidity run conditions, so you shouldn't take any trade inside this mess over here. Trading to the downside, reacting from the opening range gap low, taking these AM session lows over here, and between 11:30 AM and 13:30 PM we know that a retracement is likely to unfold into the 10 AM to 11:30 AM price action. So we're actually trading to the downside in that time window, and not even a retracement occurred, but a full reversal. Note what happens over here. Absolutely beautiful if you know what is going on. So over here, accumulation, displacement, trading back into bullish order block, closing above the first presentation, tap it back, treat it as support, and boom, buy side delivery was next. And yeah, the rest of the day, absolutely insane if you ask me. So that's it for Wednesday's price action. Okay, Thursday's price action was this huge down close candle over here. Can see that London created the high of day, trading to the downside, classic New York session, retracement or optimal trade entry into the 0.62 retracement level, measured from this candle's high to this candle's low over here, and there's also a subby over here, and also note a large wick over here. Could have used this candle as well. Note how price beautifully traded into the 0.5 level, which is a premium wick consequent encroachment level on the 1 hour chart. Yeah, note in how close proximity the high is created around the consequent encroachment level. So diving into the lower time frames, I already mentioned this, but I'm gonna repeat this. Thursdays on NFP weeks are no trading days for me. I'm actually trade reading and maybe some demo trading to get in sync with the chart, but it's not the best day for me to trade. And in general, I just don't like the price action on Thursdays. But nonetheless, let's dive into what happened throughout the day. Consolidation during London, huge sell-off away from the midnight opening range, not annotated over here. London traded to the downside. Eventually 9:30 AM came along this down close candle, created a discount opening range gap of 286 handles, which is pretty insane if you ask me. Between 9:30 AM and 10 AM, price wasn't able to trade into consequent encroachment, but later on the day, 80 minutes past 10 AM, the algo didn't forget this level and still traded into the consequent encroachment, which is a beautiful universal used draw on liquidity. So consolidation took place below the opening range gap low, creating this first presentation over here. We failed to use it as support over here, but note what happened over here. Still a beautiful reaction away from it, measuring from the first presentation's high, around 178 handles. Pretty decent if you ask me. And eventually around 11 AM we totally reversed towards the downside, had some accumulation over here. Was actually a repricing towards a 1 hour SIBI. That's where price reacted from. Note what happened during the lunch macro. So it closed below the first presentation, and note how beautifully it is respected as a premium array to help price trade further towards the downside. And the rest of the PM session was rather consolidation. Yeah, pretty decent price action for a first day on NFP week, but I didn't regret at all that I didn't take any trades on this day. So, last but not least, let's dive into NFP Friday. So, on Friday, let's look what happened at the entire week. So Monday, creating the high of the week, beautiful, sick, low resistance liquidity run towards the downside, sweeping Friday's high, trading to Friday's low. Tuesday, continuation towards the downside, huge retracement into the bearish inversion fair value gap on the hourly over here, faking or trapping traders into believing that the low was in on Tuesday and we would trade to the downside, to the upside again, but rather just a retracement. Wednesday, retracement into this range again, displacement, retracement into the SIBI over here, beautifully trading towards the downside. And eventually price is exhausted towards the downside and wants to retrace into the 0.2 and 0.3 TGIF levels, which unfolded over here. So let's take a look at the lower time frames and yeah, let's see how that looked. So on Friday, let me put a vertical line at 8:30 a.m. which was over here. You can see that beautiful consolidation ahead of the NFP release. That's why you don't want to position yourself ahead of this release, because NFP is manually intervened and you don't know which side they want to put price. So 8:30 a.m. you can already see the huge up close candle over here. So opened over here, taking some minor lows over here on sell side of the curve, sell side liquidity purge rather, displays towards the upside, taking all the relative equal highs created throughout the early part of the day between midnight and 8:30 a.m. Even traded into this mess of relative equal highs between the London session, the Asia session, into a liquidity void over here, or rather an imbalance. So okay, for this time we can look into the 15-second chart. Okay, buy side was resting above here. 8:30 a.m. came along, took the buy side over here within the first minute of trading, retraced into this busy over here, taking the 8:30 a.m. data high and displays towards the downside. Over here you have a period of, let me see, more than 4 minutes to position yourself towards the downside. And note, beautiful decline from the 8:30 a.m. macro into the 9 a.m. macro, going from data high at 8:30 a.m. to data low at 8:30 a.m. So we had this price action prior to the opening bell, but after the NFP release. And let's see what happened after 9:30 a.m. So this green candle, 9:30 a.m. opened, took the minor relative equal lows over here, trading into opening range gap consequent encroachment, which was a discount opening range gap of 90.25 handles, pretty large. Could have captured a beautiful run over here, but it was actually pretty difficult to trade. Let me see, the high of the opening range gap comes in at 20,126.75, and the high of that candle is actually one tick below the opening range gap high. So there was a small portion open, indicating that price would later in the session trade into this open tiny portion over here of the opening range gap. So huge displacement towards the downside, which was actually just manipulation, taking the sell stops below this low. First presentation on the 1 minute was created over here. On the 15 second, it looks a little bit exaggerated, but note what happened next. Displacement above first presentation, tapping back into the first presentation, busy over here, sell side imbalance, buy side inefficiency over here, busy over here, opening range gap, consequent encroachment over here. Everything is screaming that this may be a sensitive price level where price can react from, and note the reaction. Trading above opening range gap high, closing the full opening range gap, tapping back into the opening range gap high, and continued towards the upside. Over here, huge retracement, probably random, into opening range gap, consequent encroachment, and the first presentation high at 10 a.m., which is the 10 a.m. macro. Note the reaction, it's just a minor reaction if you ask me, and eventually trade all the way to the downside. And note how all these levels are actually used. So we had this price action over here. Absolutely insane. So if you were able to capture a beautiful short towards the downside over here, yeah, you have my blessing. Okay, let's delete all the circles. So 12 p.m. came along, the AM session was a huge decline. Note the relative equal highs over here and note the PM session reaction. So beautiful market maker buy model with the sell side of the curve with original consolidation over here, leaving buy stops above it. And note how the PM macro and PM session was used to trade towards the upside into the 0.2 and 0.3 TGIF levels. Let me add those TGIF levels so you get a better understanding on the lower time frames. So creating weekly low during London close on Friday, upwards price action, buy side delivery, and note that the high over here was created in the final 5 minutes of trading. It's not random, it happens quite a lot, so get used to it. Okay, that was it for this week's market review. It was a pretty short one if you ask me. The main takeaway for this market review is that you want to focus on the Monday and the Tuesday of an NFP week because it gives you so much freedom. It gives you some extra free days throughout the first week of the month. And yeah, it repeats every single month. So yeah, you can start the month with a week with 2 working days, and the rest of the week you are free. You can do whatever you want. Spend time with your family. Enjoy your free time. Go, I don't know, whatever you want, you can do it. And yeah, actually, when the first week has finished, then you are already up for the week and for the month. So it's almost impossible to end the month with red numbers. That's why I am emphasizing on focusing on the early part of an NFP week. So I hope you enjoyed this market review. Tomorrow I will be back with a market game plan for week 11 for Nasdaq. Um, I want to wish you a wonderful, wonderful weekend and an even better trading week ahead. See ya!